Hey, what's up? Thanks for coming back. This is the one and only, often imitated, never duplicated, veteran-owned and operated Dapper Dividends. I am your host, Russ. I'm going to tell you why I have been selling my precious metals, the stock that I'm looking at this week that I have been buying and I'm going to keep buying, and then just get into my two taxable and self-directed IRA portfolios and show you what I've been buying. So let's get into it. Why have I been selling my precious metals? First of all, I made a really stupid mistake around 2014, 2015, coming out of the last financial crisis, the Great Recession. I wasn't a dividend growth investor yet, but I was putting money into mutual funds through my work IRA. I've been investing in mutual funds since about 2003. I sold off a decent amount. I'm not going to give you the exact dollar amount, but it was so stupid because I had to pay the 10% early withdrawal penalty to get my money on those stocks. So I sold them here. They kept going up. I bought precious metals and they dropped. Well, I've finally been able to get positive on them. I've got over a 10% gain. I'm cashing out. I'm taking those gains and I'm rolling them into dividend growth stocks and a little bit of Bitcoin because I want something that is going to pace inflation, which I think is coming. The reason I think it's coming is that there's been a lot of new money put into circulation, and inflation needs two things to happen. It needs the amount of money that's in circulation to increase, and the velocity of money, which is how quickly it changes hands, to speed up. And the faster that money changes hands, the more things are going to cost. And the way I look at it, why cash is so bad and it's so risky to have your money in cash. Imagine you have your money in a savings account, say $100,000, and inflation is at 10%. Well, 1 year from then, that $100,000 can only buy $90,000 worth of what it was able to buy the year before. So you've lost 10% of your money, or $10,000, just by letting it sit there. So you need vehicles that will pace inflation. Precious metals have paced inflation. Dividend growth companies, stocks, real estate has paced inflation. And we're hoping that Bitcoin will. And not to mention that the stimulus money widens the wealth gap. Why does it widen the wealth gap? Well, it widens it because when people like me get my stimulus money, I made a video about it. I put it into stocks. I invested that money. Other people that need that money to live and will spend all of it, well, that money's going to end up filtering its way back to people like me, which is going to widen the wealth gap, which is why it's so crucially important that you put your money into something that will give you either capital appreciation or income, or both. Dividend growth stocks give us both of those things. Starbucks, for example. I invest in Starbucks. I'm probably going to buy more Starbucks this week with my Altria dividends, ticker symbol MO. I got $86 on those. That's almost enough for a share of Starbucks. Now, I don't drink Starbucks, but if somebody were to take their stimulus money and spend it at Starbucks, it's going to make its way back into my account. Portion of it is going to make its way back to me. So right there you see they're voluntarily transferring wealth back to people like me, back to investors, back to shareholders. I'm not saying it's right. I'm just saying that's the fact. And economics is not called the dismal science for nothing. So we don't want our cash to be eaten. And I do preach putting your money into a high yield savings account like CIT Bank. Now, what is being eaten by inflation there? Because last I looked, it was almost 0.76%. What does get eaten by inflation is the premium that I'm paying to have some cash available in the case of an emergency. And the rest of it, I will save and invest in companies like Chevron. So the stock this week is Chevron, ticker symbol CVX. I am still buying ExxonMobil and Chevron because they have been beaten down and there are some serious headwinds in the sector right now. This is why. Because they are extremely diverse. You see they have exploration, refining, transportation, commodities trading, power, chemicals and additives, lubricants, and then, of course, the one we all know and love, which is the gasoline. They are so much more than gasoline. Ships, oils, they do it all. They're all over the place. They are not just a drill and sell company. As they show, they have been paying a dividend for quite some time. Solid strength. Keep on paying that dividend. Chevron did close at $74. Revenue and earnings obviously are in decline over the year. Average analyst target $97.25. Most of the analysts do have them as a buy to strong buy. And as Exxon continues to plummet, Chevron did overtake Exxon as the largest U.S. oil company by market cap. And I can't show you the market beat data because market beat is not working right now, so we're going to use Simply Wall Street for the dividend data, currently yielding 6.97%. Now it is bad when the blue line on the bottom, which is the yield, you don't want the yield over the dividend per share, which is going to be up here for the foreseeable future. But I will show you in a second why this does not terribly worry me. The payout to shareholders is obviously above and beyond, so the company is not profitable at the moment, but they're going to get through it, and I'll show you why. Charles Schwab does give Chevron a B rating, which is a very nice buy, and this report is from today. Morningstar, this is from August 3rd, gives them a fair value estimate of $111. And you can see that they are the most financially sound integrated oil, which I'm going to explain to you right now what integrated means. They pull the crude out of the oil with the well, they put it in the tanker, they bring it to the refinery, they process it into plastic granules, and it goes to the factory where oil is turned into your chairs, your Starbucks cups, your cell phones. I like that slider phone, nice. And this is what I keep preaching. They are so much more than oil. Keep that in mind. Yes, the EVs will hurt them a bit, but oil is all around us. It is such an integrated and integral part of our life. And just to give you a little bit of contrast here, it's not all rosy. Ned Davis research firm on October 2nd gives Chevron a sell rating. And lastly, that brings me to the CFRA report from September 26th, so just a few weeks ago. I love the net margin. Net margin I'm always big on because is net margin, if you don't know, is if $100 come in, their net margin is what they are keeping. Now, obviously, this year is down, so for every $100 that comes in, they're keeping $2.09. You usually like to see that up above 4 or 5% at a minimum. The higher the better, it gives more of a cushion. And what I'm not so worried about is the free cash flow right here that is highlighted. For 4 years, from 2013 to 2016, they had negative free cash flow. They know how to navigate their way through choppy waters, and they just keep on increasing that dividend. They know how to move their money around and give themselves a nice cushion and a nice balance. And again, pointing out, they usually have a very high net margin. They're keeping a lot of money, and there we go. We see back in 2015 it was low, negative in 2016, and then it started popping back up. So they know how to operate with these low net margins. It's something I'm not that worried about. Now, this is the top three, and this is before they dethroned Exxon as the leader in the market cap. So these two flip-flopped, and then coming up third is ticker symbol PTR, PetroChina Company, which does not pay a dividend. So as somebody that is a dividend growth investor, I am not interested. There you go. Come over to the Dapper Dividends website, click on the weekly dividend roundup. In the taxable, I did receive dividends from Altria. I have 100 shares, so I received $86 in dividends. People be smoking, I be getting that money. It's not for me to judge, it's for me to know that they're smoking, they want to smoke, and they're buying them, and Altria wants to give me money for holding the company and being an owner in the company. And my buys of the week have been going down a little bit, as I still think we're hitting ahead, but I don't know. So I continue to dollar cost average in, just doing it very lightly and gently and gingerly nowadays. One share of Pepsi at $138.30. That gives me a almost 3% yield and adds $4.09 of additional income. 2 shares of ExxonMobil. Told you I'm buying. $35. It's under 10%, so that's a little bit better. It's going in the right direction. That yield is coming down, which is still sky high. Added $6.96, so $11.05 of income added. So that's giving me $15.64 a year, $130 a month, $30 a week. That's nice. That's some walking around money. $4 a day. I'll be excited when I get to that $5 a day plateau. And in the self-directed IRA, again, I got another 100 shares in there. So I received 86 from Altria and only 2 little shares of Chubb, ticker symbol CB. I received $87 of dividend income this week. And the buys of the week, I got 2 shares of Chevron. Put my money where my mouth is. Chevron at $74.34, yielding 6.94, which is nice and big. $10.32 of added annual income. And 1 share of Kimberly-Clark at $151.77. So just in my retirement account, that gave me $14.60 of added annual income that I will not be paying taxes on until I withdraw that money. The income breakdown, $1,300 a year, $108 a month, $25 a week, $3 a day. Again, as always, we're going to give it 5 stars. Thank you. And over on my Twitter, you will see I officially have my book up. The first 25 copies, I've got it going for just $1. So I got 24 left at that price. So go ahead and pick yourself up one if you want to support me and support what I'm doing. A lot of good stuff inside of here. A lot of things to think about and ponder on if you would like to pick that up. And when you do, make sure that you leave me a review and give me some stars. So if you got value from what I did here today and you want to see more, let me know what you want to hear me talk about, what you'd like to see. And again, tap that like button. It's free for you to do so, and I really appreciate it. Follow me on Twitter at RustyRam78. Also, check out my podcast called Dapper Dividends, which I do every Tuesday and Friday. It's on all the big podcatchers. You can listen to me. And now my disclaimer, this is not financial advice. I am not a licensed financial advisor. You need to do your own due diligence and realize that these are just my thoughts and opinions shared for fun and entertainment. So check out another video, and I will talk to you later.